question is really when. No, but
hello, welcome to HYCM workshop with myself, Giles Coughlin, a chief currency analyst. Very good to be here with you. I'm really glad you could make it. I was just catching the headlines of the CPI data, and I'm just going to run through that very quickly because that is the the main story of the day. Before we get stuck into the details, don't forget that as I go through this webinar, it's from an educational perspective. For those of you who are regulars, you know that it's not that trading advice. Because the CPI has just come out, we're going to go straight over to it, and I'll just explain what it all means in terms of the reaction we've just had. So this will be helpful. Hello, everyone. Sorry for the quick introduction. We're straight about it, but the CPI was released straight at 1:30. Okay, so first of all, let's just have a quick look at the CPI data. We'll just run through it and just talk it through. Right, this is what's happening. So I hope you can hear me okay, and any problems, just put it in the question in the chat. So the CPI has come in. Now the key reading is the core. That's the metric that the Fed focus on. So the expectations were to be 4.3. Now that has come in at 4.3. Okay, as expected. And the month-on-month is 0.3, slightly softer. So the month-on-month is slightly low. It was expected to be a slightly softer reading. It is a slightly softer reading in the month-of-month. And the year-on-year is as expected. Remember, the previous is 4.5%. So what this tells us is that inflation is currently under control. Remember, one of the big fears that market participants had is that inflation is going to get out of control, and the out of control inflation can only be controlled by rising interest rates. So what this means is that the Fed can stay lower for longer because the inflation metric is not freaking market participants out that an early taper is vital and an early interest rate is vital. I hope that makes sense. So we typically, because of that lower for longer message, that's positive for like equity markets. So we can see the equity markets are just running higher on the initial headline. Okay, I'll explain to you what the trading opportunity is within this in a minute. So let me just run through what you'd expect. You'd also expect the dollar to pull back. Okay, so you expect the dollar to weaken a little bit, and you can see the dollar's just pulled back from that 93 handle. The dollar yen's just been pulling back as well, and that should just boost the euro. So you can just see, if we go down to the let's go down to the intraday charts, you can see that spiking the euro higher, dollar pushing lower. Okay, so medium term perspective, it does help with like a new, say, if you had to do a trade on this, I think a New Zealand US dollar long makes sense, but I'd want to pull back to that 0.700 and then stops just running underneath that 0.6960 region. All right, so on the intraday basis, the only trade that I see is this one here in the New Zealand US dollar trading back to that 0.700 region. Okay, that's because the RBNZ are meeting next week and they're expected to hike interest rates. So a drop down there low, I'd expect to buy. Now, I'm not buying at market for me personally because it's not enough. You know what I mean? It's just, look, yes, inflation is kind of as expected and a little bit softer, but it's not like a huge miss. If it was like a 0.2% and then a 4.1% or 4%, then like, okay, New Zealand US dollar makes sense to buy into the RBNZ. Now this could like still go higher, and the bias is for New Zealand US dollar strength. Okay, so it has an upside bias. So remember the key principle, those of us who are trading here, we want to trade strength against weakness. Got this little broken trend line. The other option is to go, if you really want to go long at this, the other option is to 0.07025, but I wouldn't. I think the entry is 0.700, the big round number. Okay, just a little retest there. Stops can be very tight just below that region. That makes sense to me. Now, that is the CPI data. Now that was a big focus. So just running through what's going on in markets. So dollar's been rising since last Friday, that really strong non-farm payroll data. In fact, even before, when Fed's Vice Chair Clarida said that they saw a case for interest rates rising as soon as 2022. We then had strong PMI data for services out of the US last week. We then had very strong non-farm payroll on Friday. Excellent news. With the revisions, it was nearly 1 million extra jobs to be added, plus the participation rate was high. In other words, the job market's expanded, wages higher. So all of it's very good, okay? So that means you're expecting a little bit, maybe a dollar weakness just on that kind of, going into the event. Was it, if the CPI was very high, then this would have kept moving higher. Now, in terms of the dollar yen, the focus is still very much going to be on what's going to happen with the Federal Reserve in terms of tapering. Now, does this negate tapering expectations? No. So, any buyers back down to that 110 region, I still think is acceptable for buyers. Okay. So any move higher there acceptable, and any move down to 110.36 I think is acceptable, and stops can just be kept nice and tight just underneath 110, right? So a breakdown there, I still expect to find buyers, because think about it, CPI is pulled back, that was expected really. It's all about employment data. So will the Fed shift? Will they start announcing tapering? If they do announce tapering, that means sooner interest rates, which is meaning dollar strength. Now let's just take a look at the 10-year yields. I haven't looked at the 10-year yields yet. It's interesting to see how they're reacting. Yeah, this is what you expect. Just pushing back lower. Okay, just a little bit of a retracement. None of that is unexpected, and everything, all the markets are reacting kind of as you'd expect them to. Now, in terms of equity markets, broadly speaking, there is a great opportunity potentially here in the FTSE 100. Now, I was explaining to investors recently that as this trend line broke, price was around here 70.93, I think even lower, just under 70.80, and I was saying that was suitable for buying. So some traders got into a very low risk, high reward entry. Maybe even mentioned it on Monday to the HYCM guys here. Now there's another opportunity, which is a break of this trend line. So on a medium-term basis, the outlook for the UK is good. UK is now vaccinated 75% of its population. Goldman Sachs upgraded their forecast for the FTSE 100 to 7,900 in 12 months' time. That break of that trend line, we've had a break of the daily trend line, break of this weekly trend line. If prices closes above and stays above, any retracement back down to 71.70 is suitable for buying. Stocks can be placed underneath that 70.67 low. Okay, so the environment is good for FTSE 100 buying. What we want to see is a break and a close above this level. Okay, on a weekly closing basis, that does open up FTSE 100 upside. Also, the Euro New Zealand dollar pair. Now that is moving off very nicely in to our direction, and of course that has been supported by the CPI data, with the New Zealand dollar soaring higher on expectations that the RBNZ are going to raise interest rates next week. Now we're expecting this to keep moving lower. We got this bearish engulfing bar. Any retracement back up to that 1.6700 is suitable for shorting. The euro is weak. The German PMI data out this week was disappointment. We are seeing a little bit of euro strength, but we're also seeing more New Zealand US dollar strength. You see it ripping higher, pound ripping higher, of course, because investors know weak dollar, that should boost New Zealand and the pound in the medium term. So both of these pairs are suitable for going long for the next sort of couple of sessions. And the Euro New Zealand dollar, I've got a couple of clips running there. Don't forget, if you're not following me on Twitter, make sure you are, because you can see here, like I do put some pretty decent updates and keep folks informed. So here was me explaining about the Euro New Zealand dollar outlook from the 4th of August, and just saying today, yesterday, that outlook is still there. So if you're not following me, there's my Twitter handle at Giles Cochran CCA. So this is a clear bias to sell the Euro New Zealand dollar pair. You can see that's really moving in the right direction. Number of different signals that were coming here. Remember, first of all, it's the fundamentals. The fundamentals here were clearly saying more downside. Now, the reason for that is the RBNZ expected to hike next week. They had a very strong jobs print last week, 4%, excellent unemployment level, and the euro is got a sort of a more weak but bearish bias. Okay, so you can see here that selling off sharply. You can see that there's a hidden bearish divergence on the 4-hour chart here. You see how the price is sort of pretty much flat, but the indicator is high. That's a hidden bearish divergence on the 4-hour chart. Also on the weekly chart, we can see that price is moving low. Just how the green signal is moving down below past the yellow signal. That's just opening up more downside from a more medium-term perspective. And then there was a hidden bearish divergence that I took this morning on the euro New Zealand dollar 1-hour chart. You can see here that the indicator is flat, the price is flat, but the indicator is making higher highs just below and then moving down to that first support area around that 1.6658 region. So a lot of downside opening up, and I'm expecting euro New Zealand dollar sellers into the RBNZ next week. If we move down to that 1.6500 region before Wednesday, taking profit down at that level, really excellent opportunity there in the pair. So any retracements higher can be considered for going short. And you see here we had this bearish engulfing bar. Here's a learning point for you. When you have a bearish engulfing bar, it's a candlestick that entirely engulfs the previous candle. And not only does it entirely engulf the previous candle, it engulfs that candle, the candle before it, and the candle before it. So 3 days worth of price engulfed by this euro New Zealand dollar. I've got a couple of clips running on this. 1/3 clip I tried to enter this morning, and you can just see here that's moving nicely down. And the technical entry is a break at that level, and the first kind of support area is down to that 1.6540 region. Okay, see down here. Now, if you are short, one mistake you must avoid is, like, it's easy to do this mistake, is that price comes down in this area, and if price hits this area, you think, oh, I'm gonna wait to break through the area. Price never tends to do that. It tends to, well, I say never, that's the wrong expression. Price often, you know, if people are selling here, traders will take profit here, even if the outlook is still like quite negative for the pair. People will take profit, and there might be a retracement and then a sell. So when you get to an area like this, the best way to do it is, if price moves down here, I'll take profit. And then if price breaks through, I can look at re-entering at 1.6400. Okay, so you're not, you know, all is not lost if you take profit there. You understand? You can just move that lower down and trade it like that. That is the excitement, hey, of you know, being all live here with that. And of course, that weak CPI data would have helped upside in gold. So that would have helped silver and gold move higher. And you can see silver and gold both moving higher on that print. Nothing to trade with those two. The only sort of tradable opportunity that I can see is as outlined there in New Zealand US dollar pound, a US dollar upside on that dollar weakness story. Dollar yen pulling back, as I said. I think 110.36 is really reasonable. The area where I'd be interested to get back in is 110. Okay, that is the kind of a region where I'd consider it suitable to enter in. Yeah, that's very nice. We've got some very nice profit running here in the dollar yen. Sorry, I closed my dollar yens before the event. Got some very nice profit running in euro New Zealand dollar, which is just great to see. Just closing out some positions there. Yeah, that's great. Wow, lovely. Okay, it's always happy when you're onto a winner, right? Okay, so what we want to next look at is, let's have a quick think what to look at next. Just finding my bearings. Yeah, so the key thing to take away here is, what's the big story? Okay, the dollar is really driving things at the moment with these Fed taper hopes. So What we're looking for is if we get a dovish Fed member saying something hawkish, that could result in some dollar strength. So even though the dollar's weakening, I'm not buying that weakening carrying on and on and on forever. So even if the dollar yen weakens, I'm expecting buyers. So I am expecting intraday buyers around that 110.40 region. Now I'm not going to trade it, but that's partly because I'm in some heavy profit now with the euro New Zealand dollar pairs, and that's just running very nicely in the direction that I want it to. So I want that to keep running nicely. But apart from that, any dips lower in that dollar yen would be considered suitable for longer term buyers, but it's that 110 region. Okay, folks, let me hear from you. I want to check that you're with me. Is this making sense to you? A lot of these, when you're really in the zone and you're really understanding what the market's doing, I'm obviously moving quite fast. So I want to make sure you're with me. Give me some feedback. You're loving this. You're seeing the story. You're seeing the narrative. Anything you're confused on, let me know in the Q&A box so that you're following it. Okay, science. I'm taking that science is making sense for now. Yeah, 10-year yields pulling back. FTSE 100. Stocks just loving this. Really. I'm not chasing these US stocks. The only stock that I'm interested in is the FTSE 100. That's the only one. Okay, folks, short and sweet today, but I think like that euro New Zealand dollar sell makes sense into next week. So I do like that as a trade for potentially all week, and you can see here that hidden bearish divergence, the way it accelerated through. I think there's more to come. I really do. So that's definitely something to be keeping a good eye on. Folks, short and sweet today, but we've covered everything we need to. Are there any questions that folks have? Yeah, Jabin, absolutely. Jabin, yeah, when you say, I understand that it is free if I open an account with HYCM. When you say it is free, what do you mean, Jabin? Do you mean because it doesn't cost you to open an account with HYCM? Oh, yeah, okay, Jabin, I'm with you. Yes, Jabin, it should be. Let me give you a link. Just give me a second. Let me give you a link. Try that link, and also try this one. Okay, that should be what you need. Jabin, any problems? Yeah, just send me an email. And I'll put you in touch. I'll sort you out. Yeah, I get it. Jabin, yeah, so basically you would have access to Financial Source and everyday webinars with me. Yeah. Yep. That's the idea. We want to help traders, right? That's the idea. Yeah, good. Jabin, excellent. Folks, thank you all very much. Short and sweet, but to the point. Remember, New Zealand US dollar upside makes sense for this 0.700 region and from this 1.3800 region for the pound US dollar. Yeah, you're very welcome, Jabin. Thank you very much. Warren, good to have you here. Saeed, good to have you again. Rakib, good to have you folks. Take care now and look forward to being in touch. Thanks now. Goodbye.